Guys, how are you doing today? You are welcome back to my YouTube channel. Right, I believe that you are enjoying yourself and you are also studying much. Right, to the new viewer, thank you for joining in this section. Right, I will want you to subscribe to this YouTube channel because this is a platform where you get quality education on the financial market. And to my old subscriber, thank you for always supporting. Thank you for always checking in. Uh, and I will want to tell you to make a comment, right, or has a question regarding to this video or other content that I've actually made before. Then ensure you like this video and also share with other fellow traders. All right, thank you very much. So let's get started. Right, in today's session, I'm going to be teaching you how to make use of market structure and institutional order flow, right? And this is going to be in line with what I've actually taught before, right? In the basic videos I've actually made on my YouTube channel, right? You can actually look back and see all those content on how to follow institutional order flow, what is an order block, and how to trade with the big banks, right? This is really very important if you really want to be successful in this year 2022. So I'm here again to teach you this new way. I mean, this particular concept for you to be profitable and be consistent in this new year. All right, so let's get started. Now, this is going to be like a review of the trade I took this week. That's actually going to be on the 19th of this month, right? I'm not sure, maybe it's going to be on Monday or on a Tuesday, right? So we're going to see how I follow the market structure and also the institutional order flow for me to get this trade. Really, many people have actually asked me questions regarding to institutional order flow. Which time frame should you really follow? And which particular time frame is it? If you make use of the higher time frame, are you going to get it right, or maybe just make use of lower time frame? But my advice will be that when you want to get institutional order flow, the best you can actually follow is maybe the 4-hour time frame or 1-hour time frame, and maybe daily time frame and weekly, monthly. All right, you can follow that. But for me, as an intraday trader, basically I follow 4-hour time frame and maybe 15 minutes time frame, 30 minutes time frame, 10 minutes time frame, as the case may be. I'll just combine those time frames together for me to make the best out of it. But for today, I'm going to be teaching you the market structure and institutional flow based on what I actually traded on this just concluded week. All right, so let's get started with the market structure. I've actually I have a video on market structure on this particular platform. Well, let's see how we can make use of these and for us to really get that done. Right. So I've actually removed the candlestick. So let me just draw the market structure. You know, I told you when the market is going in higher high, higher low, right? Higher high, higher low, higher high, higher low, higher high. Now, the basic things that you should actually look out for in this particular instance is for you to look for a bullish trade. So in this regard, you have to look for a good bullish order block based on the rules of order block I've actually taught you for you to follow in the institutional market. I mean, institutional order flow. When the market is bullish, don't dare to sell. And when the market is bearish, you must not actually be looking for a buying opportunity. So this is really what I did in this particular instance, right? I saw that the market is actually bearish. As I can see, I have a lower low. I mean, market was initially in a bullish trend, right? It was going lower low. I mean, higher high, higher low, higher high, higher low, higher high. Then we have some internal structure that was formed in between the market. Then what happened next? Market broke through the major structural low right before this last higher high. So this is actually the reason why I changed my direction from being a buyer of this particular asset or maybe a currency pair to a bearish flow. All right, so let's quickly go back and just have the candlestick back, right? As you can see, that the market structure is somehow bearish from here. As you can see, right, we have a bearish structure. We have an, let's say this is an higher high, then this is a low, then this is a lower high, this is a lower low, right? This is a lower high, this is a lower low. Let me use something to just mark that out. So starting from here, right, we have an higher high here, right, and higher high here. then we have a low. We can't call this a lower low because it is not lower than this particular area. Then we have a lower high, right? We have a lower low. Now, concerning market structure, I'm going to make a separate video to teach you how you can actually spot market structure and how you can actually follow that. I'm going to make maybe another video I'm going to make after this is going to be on market structure. I know I've actually taught concerning that line before, but I'm going to make a new video on that. Right, so this is a lower high, as you can see that. Then we can call this a lower low. Then in between this major structure, we have some internal structure that we can see within it, as you can see. Now, this is the major structure, structural low that we have here. That you can see before market actually break through this particular area, then we're beginning to see a low, a high, a low, a high, a low, a high, a low, a high, a low, and things like that. This is really what I called internal structure for me. Then let's continue. As you can see there, we have another lower high here, right? We have lower low, we have lower high, we have lower low, we have higher high now because market structure has already broken through this area. Then we have higher low, right? Then we have another higher high, we have higher low, we have another higher high. Now, in between all these structures I've actually mentioned or I've actually marked for you, right, we have some other internal structure that we have within it. Just like what I said, I promised you a video to explain what that market structure is. But basically, I want to make this video as short as possible so that I can really drive home my point. So explaining my trade, right, which is actually, let me try to bring it out. This particular trade that you can see here, right, this is really what I want to explain. Why did I take this trade and what really happened afterwards, and what is actually the another trade that was taken on this trade, right? This was the before of that chart, of that particular trade, which was taken on a 1 minute time frame. So I'm going to show you how I link the 10 minutes time frame together with the 1 minute time frame for me to really take this opportunity, right? So with that, I actually see that this was a major structural high that was formed. So in this case, this is going to be called our higher high, right? Which is actually the higher high here, as you can see. Then this is the previous higher low or the last higher low that you can actually see right now. I actually did the wrong thing here. This is an higher high. Then we have another one, right? An higher low, right? Which is actually going to be a higher low, as you can see. Now, looking at this, I'm going to consider this as my external structure. Many of you would have actually seen that markings on my public Telegram channel. So I'm going to call this my external market structure, external structural break. Now, within this particular higher high and higher low, before market eventually made another new lower low. So I'm going to mark this as lower low, right? I will mark this as lower low, right? Before market make this lower low, you can see that we have some within structure within it. So this is really what I called internal structure. Just like what I promised you, I'm going to have a video on that very soon, all right, which might actually be next week or 2 weeks, in 2 weeks time, right? As you can see, we have some other internal structure that came back to break this major structure. So I will not begin to look for a sell if this particular structure is not broken, because majorly market is definitely still up. So basically, if I really want to buy this pair, I should really be looking forward to buy this pair around this particular order block here. That is where I should be looking for this buy. But basically, I sold this particular pair. So why did I sell it? This is really what I'm trying to explain, all right, to you. This is really what I'm trying to explain to you. So when I saw that this particular major structural high has been broken, forming some internal structure, so this made me to actually consider this particular order block, because this was the last order block that led to that this major structural low to be broken. Then anyway, before that was formed, then we can also spot some liquidity that has been taken off here. You can see we have some liquidity around here, right? I've actually taught on liquidity too. You can look back and check my videos on liquidity that I've actually made before. So this is a liquidity, as you can actually see it here. After market took out this particular high, the market came back and break this structural low. Then what is the character I actually noticed in this particular order block before picking it? Now you can see this particular order block was rejecting on a breaker block, as I have it here. It was rejecting on a breaker block. This is another video that I've actually made. You can look back and check my videos on breaker block and also on mitigation block. These are ICT concept, right? ICT was actually the one that thought on breaker block, but I actually took it and actually build a concept, build a strategy from that. So as you can see, this my order block is rejecting on this breaker block. The market eventually went down and break this major structure. So by the time price retests back into this particular zone, let's have some replay and just see how this actually happened. Then I'm going to show you where I got my setup from. So from this is 10 minutes time frame. So this really made me, right, I actually refined it up to this particular level, the 50% of that. So this made me to drop to 1 minute time frame. So on 1 minute time frame, this was the setup, as you can see it here, right? This was the setup. Then majorly some people would have actually been trading Wyckoff and some other concept on this, right? I don't trade Wyckoff, but I have a concept web that I called a 3E structure. Actually, it looks like Wyckoff and is actually a simpler, or is the simplest way to really explain what Wyckoff is. Anyway, what I noticed was that price was really accumulating up, as you can actually have it here. Price was accumulating up. So you can see it from here. Then we have all these liquidities being forming, and all these liquidities were forming. But basically, I began my counting from here. I have 1, right, 2, right, 3. So when I noticed that all these things were happening, so I began to look for opportunities to sell. But before looking for opportunities to sell, right, I want this structure to be broken. Right, as you can actually see it here, I have my alarm set because this was when I got to the market when this particular structure is yet to be broken. So this made me to actually set this line here and put an alarm there. So just like this, I put up this line here that if this structure is broken, then I will begin to look for an entry. So when I spot that, then let's play this out and see what eventually happened. Right, so that structure was broken, as you can see. So this actually made me to set up this entry, just like what you can see here. So let us actually set it up. All right, this was my rejection zone, the entry rejection zone. I put it above this particular zone in here, above this particular zone. Then I set my my sell to, right, my entry, then my stop loss is actually around 2.5 pips stop loss. So that was when I said, as you can see this, actually the price has actually retraced back into my rejection zone before I took the screenshot of this. But let's see, my target is actually going to be, go back to the 10 minutes time frame. Don't forget, we are simply following the market structure. Before I got this particular setup, I have already ensured that my setup, right, my market structure is already bearish. Don't forget, all what we are doing at LPC is just a rule-based trading. There is no emotion. We are not going to be ruled by emotion or by a poor psychological state for us to determine if we are going to jump into a trade or not. We just follow our rule, and that is all, right? So with this, I was expecting markets to actually, I was targeting this particular area, which is actually my target. But basically, I would have actually moved it into this area because some of the time, price will just retrace back into this particular area. As you can see, this is something like an equal low. Then after that, we want to see price retrace back before it continues to go down. But majorly, this should have actually been my target, which should be 1 to 14 risk reward ratio. So let's go back to the 1 minute time frame and see what happened. So price retraced back into that zone. When price tapped into it, let's see what happened. Then price tapped into our entry. Then we began to see what happened. That is actually for that very day. You can just imagine you just taking 10% of your account. Let's say you are risking 0.5% of your account per trade. Now you would have actually banked about 7% of your account on this just simple way of trading. So with this, let's see what eventually happened. Then price just began to retrace back. Then you can see, all right, we are not stopped out. In this particular price began, just like what I said, right? This was when I took my profit anyway. And you can see that is what I even, that is what I showed on my Telegram channel. You can see where I actually took my own profit. That's actually what I, when I took my profit. But as many people as possible that could have actually owed it to this particular state, this could have actually given you some profit at that particular day. Then you can see, let's see what eventually happened on this particular trade, right? Is yet to actually get to our target. Then price actually got back to our target, just like what you can actually see here. price go to our target. This is actually what we're looking for, but I've already caught my trade as early as possible because it was entering into another day. So I don't really want to hold into another day because I'm just an intraday trader. I love trading that very day and closing it that very day. If I want to swing trade, right, I would have actually gone to 4-hour time frame to look for my setup before going to maybe 10 minutes time frame or 15 minutes time frame to look for my entry. But because it's just an intraday trade, so that's why I'm looking at 10 minutes time frame or maybe 15 minutes time frame for me to really get my setup and actually take that trade. So this was what I actually traded. And the following day, right, which was actually on the 28th, right, of January, right, 28th of January. Now, so what did I see? On 20th of January, this now meets all the rules I've actually been teaching you on this YouTube channel, right? We have an external structure break again, just like what I told you. I'm not going to trade until I see the major structure being broken. So this will actually suggest to me that market is still very much bullish. And then I'm not going to take a buy until this particular high also is violated. Right, this is when I'm actually going to change my direction to a bullish market. But for now, I'm still super bearish on this particular trade. I'm still super bearish on this particular trade. So this implies that I'm going to mark this particular area. Right, I'm going to mark this particular area as where I'm expecting my trade to really come back to. So if price actually come back to this particular zone, although this particular zone was supposed to be my first, but I wasn't able to catch that, right, because it is during ideation session and I was already asleep. And you trust me, right, this trade would have actually been a loss. As you can see, that price just broke trade without even giving up any entry. So when price got to this particular rejection zone, this is now my bias time frame. I mean, my bias rejection zone. When price got to my bias rejection zone, then I dropped to 1 minute time frame for me to scan for another 1 minute entry. So for us to look for 1 minute entry, this looks like a structure. So if this particular structure is broken, this particular structural low, if it is broken, then I will be looking to sell from this particular high. Right, and if the stop loss will really be too big, then I have to look for another opportunity. But let's see if that zone will be broken. Then we have that zone broken. So this implied that we're going to set, actually I did not take a lower time frame entry on this. I just set a pre-entry, and that was that. I'm not going to explain that here. Maybe in another video I'm going to explain that. So let's leave it as about 3.5 pip stop loss. That's actually going to be our stop loss, 3.5 pip. So let's see what that will be. Then our target also will be on the 10 minutes time frame again, right? We'll be targeting this low, right? Which is actually going to be about 14% again, right? So let's see what happened. So then this particular trade, let's see, are we going to be triggered in? Right, price eventually triggered us in. Then when you already have one entry, now you can just follow the order flow. Now I'm going to follow the order flow of 10 minutes time frame. So going into 1 minute time frame, I can pick as many entry as possible on when price is actually dropping down. I will just be scaling in positions, adding in more position, then stacking the market maker as they're actually dropping down. Now let's see what happened. Now you are not just doing that emotionally. I mean, you are not just doing that by just gambling your trade in. No, you are also following the rules that I've actually taught you, right? Which is following the major block, right? The major rules of our order block. So let's see what this is going to really what is going to happen here. Now, right, I want major structure to be broken. And what is my major structure? Right, with this, really, I can consider this as my major structure here because we're just on a 1 minute time frame. So let's consider this as my major structure. Then I can also consider this particular area as where I want to take my entry from. So with this is going to be my order block, right? It's actually fulfilling all the rules of order block as met. But majorly, we have this particular zone has been broken, which is actually what we can also consider as major flow, structure. So that particular zone also was broken by a week. I'm actually going to consider that because I am on a 1 minute time frame. So let's see, right, just like what I said, another entry would be here, another entry will be here, and then our stop loss, we can actually put our stop loss above this particular high here, in case price want to form an head or shoulder pattern. So I'm going to leave it at 2.8 2. Now, some of you might actually ask that this is not really possible. Then that is actually on your own. This is really what I've practiced over time, and I've actually seen that it is very, very possible for you to have as tight stop loss as possible like this, right? So with this is actually going to be another entry for me. As you can actually see, price actually dropping. Then I'm going to have another one. As you can see, another major structure was broken here, right? So this is my second entry. As you can see there, I'm just teaching you how you can now scale in more entries from this. So we are going to have another opportunity here. I'm going to put it at this, right? Because of we are in 1 minute time frame. I'm not going to refine that. So another entry here, stop loss will be above this high. Then an entry will be here, which is actually going to be about 3.5 or 3.6 entry. So let's see what happened from here. So we have this also triggered in. So we have entry 1, the first entry, the second entry, and the third entry on a single trade. Now just imagine you just trading this each position. Then on your, let's go to 10 minutes time frame. This one we want to drag it in here. Which one are we following here? Right, I want to go to 3 minutes time frame just for me to just drag that out of opportunity. So this is it. Our target still remain here, which is about 1 to 21 risk reward ratio. Then this one will be 1 to 12 risk reward ratio. So let's see what happened on this particular trade. Right, I can as well add more positions. Actually, I can as well add more position. As I can see that this particular structure was broken even on a 3 minutes time frame. A major structure, I can consider this as a major structure. Now I have my internal structure here. Just like what I say, I'm going to teach you on this. Then I have another block here, which is rejecting on a pseudo with an impulsive move that break this through this particular area. I can add more position even on a 3 minutes time frame. Right, you know, I'm simply following the 10 minutes order flow, right, as an intraday trader. So let's see if this is actually going to be triggered in. Right, we have that trade in already, right? Because let me just try to pause this. Right, so as you can see, that trade is exactly at that particular block. Let me put it there. Right, this trade was also triggered in. Then my target can actually be in here. Right, my target will be the exact zone I'm actually looking for, which is actually going to be 1 to 8. This actually makes sense. As you can see, our first target was met, which is actually this area. Our first target was met. I mean, our first entry, the second entry, the same thing, right? The third entry is actually going to be here. So we have about 1 to 14 for the first one. Then the second one will be 1 to 21. The third one would be 1 to 12. Then the last one would be 1 to 8. Now, if you calculate that together, you know that at least, now let's calculate it together. Now, the first one, we said you have 14%, right? You calculate that plus the second one is about 21%, right? Plus 12%, then plus 8%. Then how many percentage are you going to have altogether? This is about is 20, then we have 41, then we have 55. That's 55%, right, on a particular trade alone, just following one pair. Then you can see how you can actually scale in and add more position by following your rules without breaking them. And this is how you can actually be consistent and profitable in the forex market. Now you can see the first one, look at where we actually took position, just following the trend, just following the order flow and the market structure. You know, you can as well have much more opportunities as this particular price action is actually going down. Right, on just single pair on 1 week, now you've already scaled in 55%. Now, I'm not actually advising you to trade 1% of your account. For me, I trade 0.25 or 0.5. Just imagine me just trading 0.5% of my account, right? That's going to be about 22% on that account for that very week. Just imagine, just let me use 0.25, which is actually the major percentage I'm risking per trade. That's going to be about 12%. In fact, if you are applying for a pro firm, just one pair can actually cover you for everything. I mean, just to pass the first evaluation or whatever evaluation that the pro firm are actually giving to you. All right, guys. So this is really what I want to pass across to you. Now, if you have more questions on this, right, you can actually send those questions on the description box. I mean, in the comment section, right? Now, if you want to apply to our mentorship, the mentorship class is actually opened now. Now you can apply. We have a special class, right, which is actually more of a one-to-one class. That's about $2,500. Then we have the simple class, which is actually Mentorship Pro, right? This is actually require you to have much access to me. At the same time, you are going to get my setup, but it's not compared to the mentorship premium, which is 2.5. The first one, Mentorship Pro, is going to be $550, and the second one, Mentorship Premium, it will be $2,500. Each program are actually different, and if you want to have setup from me, all these programs also have one benefit or the other based on this particular value that will be added to you. All right, guys, thank you for following. Thank you for checking in once again. Don't forget, if you're a new viewer, please kindly subscribe. It doesn't cost you anything, and make sure you drop a comment and also like this video. Then endeavor to also share it to as many traders as possible. I will talk to you later.